Welcome back to Bazaar Morning Call. As promised, now we have our entire team joining in to help us with all the stocks you need to watch out for. There's lots happening with Paytm. So Nimesh is joining in first up to tell us the latest on that. Nimesh, over to you.
Hi, morning, Sonia. So, I'd given enough hint on Friday itself that who the potential seller is likely to be, and indeed it turned out to be. So, Berkshire Hathaway sold its entire 2.5% stake in Paytm via block deal on Friday. The buyers include most of the FI, so which is why the FI number on Friday looks very large. But so it's a clean out trade from Berkshire Hathaway. They've sold at a loss in Paytm after holding for 6 years. Now, the further implication is because of the exit from Berkshire Hathaway, the free float for Paytm will go up, which means that possibly in the next review of MSCI, the weight for Paytm will also increase. So that's a positive thing to read into. But the fact that I'll go with the green because it's a clean out trade and Berkshire has sold out its entire stake in Paytm on Friday.
We did give a hint, Nimesh, did we not? Large investor, marquee investor, one of the largest sitting on a huge pile of cash. So yeah, bang on. Congratulations, Nimesh, on that.
Thank
you. Let's talk about the SEBI board meet which happened, and there was a lot of expectation about what can happen, what not, potentially maybe approved at that board meeting. And one of the things was regarding holding companies. Yash has got details. Yash, morning.
Well, Prashant, good morning. So, of course, disappointment as far as these holding companies are concerned. It was widely anticipated that market regulator SEBI would finally give its approval to those voluntary delisting regulations, under which an important part was about, delisting of the holding companies, which aimed at giving the right value to these holding companies, which generally trade at a discount. Contrary to that expectation, there was no approval which came for the voluntary delisting regulations. And these stocks, a lot of these holding companies, be it BBTC, Maharashtra Scooter, Pilani Investments, Tata Investments, were running. There was a significant addition to the market cap for some of these companies in the last few weeks on expectations of these regulations to come in. There is no approval on that one, and SEBI has said that it will have to go back, reassess more data, and if required, pass another consultation paper before it finally gives shapes to these, delisting regulations.
Okay, all right. Thanks a lot, Yash, for giving us an update on that front. Well, I'm looking at two cement stocks. One is Kesoram Industries and the other is JK Cement. Let's start off with Kesoram Industries first. There are two pieces of news out here. One is they've responded to a CNBC-TV18 exclusive, which we reported on November 24th, that it's likely that, Kesoram Industries falls into Ultratech Cement, and we've given you, how things could work out, because as of now, Mr. K.M. Birla, he owns part stake, his entities hold part stake in Kesoram Industries as of now. They've responded. They said that they're currently exploring fundraising avenues with regard to repayment, retirement of debt that's due next year. But they have not taken any decision that warrants any kind of disclosure. So that's what they've said on that piece. The second part is yesterday they have put out that they'll be having a board meeting on Thursday, and they're going to be withdrawing the scheme of arrangement that was announced on May 22nd. That's with regard to separating the rayon business from the cement business. So they're withdrawing that proposal. They also go on to say that they're going to be looking at possible options of debt repayment as well as retirement with regard to those NCDs. The problem out here is that they were borrowing at close to 19%. So they want to repay or, just retire this particular debt. How do they do it is going to be very, very important. So that's one stock. The other one is JK Cement. They've commenced their grinding unit of around 1.5 million tons odd. That's on expected lines. It's at Madhya Pradesh. So their capacity, as they have been saying, it's gradually moving towards 25 million tons by 2025. So we'll have to keep an eye out on that one. Both of them, expect them to react positively.
Okay, keep an eye out on these stocks. But there's Fortis and Fortis Malar also in focus. Ekta's here to give us the latest on that. Ekta, morning.
Morning. Well, I expect both of the stocks to be in the green because it is positive news. I'll get to that in just a bit. But the news is that Fortis will be divesting its entire 62.7% stake in Fortis Malar to MGM Healthcare, which is a private hospital company, for 128 crores in an all-cash deal. Now, Fortis Malar is a 140-bed hospital in Chennai. It is a listed company. The company had some unresolved legacy issues which Fortis was facing in the company, which constrained further investments. So Fortis now now is going to be divesting all of the hospitals which they feel are underperforming. This is the second hospital that they've divested just in the past 2 quarters. The first one was another one which was in Chennai for 152 odd crores. So maybe hospital margins would improve. Hence, it's a positive for Fortis because they will also be getting cash into their books. MGM Healthcare, it's a South-based hospital chain. Their bed count is going to rise to 800 in Chennai. So maybe this would be positive for Fortis Malar, considering that it would be going into stronger hands which are focused in Chennai. So I expect both stocks to probably be in the green on account of this news today.
All right, Ekta, thanks very much for that. Well, let's focus on a few other names, and MapMyIndia is one of them, and there is Sterlite Tech as well. Reema's got details here. Reema, morning.
Hi, good morning. Sorry. So MapMyIndia board has approved a fundraise to the tune of 500 crore rupees via a QIP. As of September, the company already had cash in books close to 518 crores. So with this, the total cash kitty will rise to above 1,000 crore rupees. The utilization of the proceeds will be important. Will it be for an acquisition? Because in FY24, the company has committed to grow its top line by 40%. But in the first half of the year, the company has only seen a growth of 28%. So it boils down to the company delivering an over 50% growth in the second half of the year. So MapMyIndia fundraise QIP 500 crore rupees. The second stock is Sterlite Technology or STL, where there's negative news because the company has lost a legal dispute because of which they will have to pay financial damages to the tune of close to about $3 million. This case is against a company called Shin-Etsu, where STL was supposed to buy certain products from Shin-Etsu at a particular price. But during COVID, in the months of April and May, Sterlite Technology, STL, evoked force majeure, and they said we cannot buy those, promised, products in the what was stated in the contract, and therefore this appeal has been going back and forth for the last 3 or 4 years. But now STL has lost the appeal in the Supreme Court, and as per the award, STL has to pay damages of about $2.1 million. Plus a simple interest of more than 5% for the period and certain costs. In an earlier intimation about this legal dispute, the company had totally indicated that the damages is close to about $3.1 million. So we assume that's going to be the potential hit for STL. Back to you.
Okay, thanks a lot for that. Well, let's go across to Sonal. She's tracking Cello World and Syrma SGS. Sonal, morning.
Good morning, Sonia. Let me start with Syrma SGS first. The stock has been doing really well. Now the company has incorporated a wholly owned subsidiary. The company is named Syrma Semicon Private Limited. This will carry on the business of designing and manufacturing the buyers, sellers, assembly, exporters, importers to make memory chips, memory modules, PCB assemblies and other storage products, just an extension of the current business that the company is in as well. For Cello World, it's their first earning after listing as well. They've given quarter-on-quarter numbers, and while they have seen a 4% revenue growth to come in at 489 crore rupees, their EBITDA has been largely flat at 120 crore rupees. Margins have declined by 60 basis points, but profits have increased by 4%. So these two stocks will be on our radar today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's do a quick recap of all the top stocks that we just covered for you. The ones with positive news flow. First up, we have Paytm, Kesoram Industries, JK Cement. We have Fortis Healthcare, Fortis Malar Hospitals, CE Info Systems, and Syrma SG. Well, stocks with negative news flow, well, they include holding companies, STL, and Cello World. Okay, well, those are all the top stocks that we're looking at, but there are some brokerage notes as well that have come in early this morning. Hormuz has gone through them. He joins us to fill us in with the list. Morning, Hormuz.
Morning, Nigel. And I'll start off with one of the outperformers of the year, that is BSE, where Jefferies has initiated coverage with a buy rating and a price target of 2,700 rupees. And it says that it can leverage macro tailwinds and some derivative headway to report a 150% earnings growth in FY24. And it also says that it expects the derivative segment to be 35% of BSE's revenue in FY25. Now, remember, the stock, as I said, has up nearly 300% in 2023. Next up is also Jefferies, that has a buy rating on L&T, the price target of 3,400 rupees, and it says that a capex cycle traction and completion of the legacy low margin projects will drive upside in the next 6 to 12 months for the stock. But it says that the muted second half of FY24 guidance that the company has issued is a near-term dampener for the stock. But they're saying that the ESG upgrade, any ESG upgrade that comes in, is an added sweetener, and that the management is working with ESG agencies to tell them more about their defense exposure as well. And lastly, since we spoke about Fortis, Goldman Sachs has come out with a note. It has a buy rating, a price target of 400 rupees. It says that this divestment marks Fortis's exit from the Chennai market, and it is a significant step towards their portfolio rationalization. And it still has 4 to 5 more facilities that are operating inefficiently, and some of which that the company may end up divesting in the near future. And lastly, the Fortis also plans on adding over 1,400 beds over the next 3 to 4 years in the markets like Delhi, NCR and Punjab. Back to you.
Okay, thanks a lot for that. So lots of interesting brokerage ideas over there. But let's talk about the other big positive for our markets, which is the fall in Brent crude prices. Brent is now at $80 a barrel. Manisha Gupta is here to give us a roundup of all the action from the commodity markets. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, we had seen the Brent fall below 80 as well. 78 has been the low for the month of November, but some stability now coming in. And this is ahead of the OPEC and allies meeting, which is on 30th of November, with expectation that Saudi Arabia and Russia could extend voluntary supply cuts into 2024 as well. But we all know that some OPEC members have increased output. There is record high U.S. production, surging China inventories, and that is keeping the prices in check. But one sector which has continued to run up for this month as well has been the precious metals. You have the gold prices now trading at $2,015 an ounce, far away from an all-time high, especially with the US dollar index trading at a 3-month low. That is absolutely offering support for gold, silver, copper is trading in positive, and so are various other industrial metals.
Okay, Manisha, thank you very much. We'll keep coming back to you for more. This is an important week, especially for oil, with that OPEC meeting scheduled for Thursday. We'll take a quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services will join in to take us through some fundamental stock analysis. Later, we'll also be talking to our technical experts for trade setups. Stay tuned. All of that coming up.